Hey, this is Brian McCarthy with a quick note on China's ambitions to turn the RMB into a global reserve currency. We're here in a chilly Hyannis harbor where I think the ship has sailed on Xi Jinping's ambitions in this regard. There are two aspects to internationalization of a currency. One is its usage as a settlement unit of account, and the other would be its usage as a store of value as a reserve currency. And the dollar obviously has both features. It's really advantageous for the global trading system for everyone to agree on one currency to use in which we denominate the bulk of global trade. It sure beats having to haggle, I want to settle in Swedish krona. No, I want to settle in yen. We just all agree to settle dollars. And over the years, a very sophisticated piping has developed to enable everybody to do that. So it's quite convenient. But that is something that China can and will break into out of necessity. Because if it comes to a global decoupling, which is an increasing risk, China and many of its trade partners are going to want to continue to trade with each other, even in an environment where China might get cut out of the dollar system. So this is what's driving China's desire to set up the piping to be able to settle trade in RMB. And again, many of its trade partners are going to be happy to accommodate that because they don't want to get cut off from trading with China either. However, China's never going to be able to get the second aspect of internationalization, which is reserve currency status, because that requires that people want to store their accumulated surpluses from trade in that currency. Not in the foreseeable future will China have the requisite rule of law to make people comfortable making long-term investments in size in that currency. And additionally, the capital controls are just a non-starter. They make Chinese assets illiquid, and you just can't know that you can get in and out when you need to. And furthermore, the existence of the capital controls suggests that there's a serious imbalance in the Chinese currency that will cause it to lose value at some point. The simple fact of the matter is that over the last decade, Chinese capital controls have been keeping money in, not keeping money out. As JFK quipped to the Soviet Union way back when, at least we don't have to build a wall to keep our people in financially. China does, and should that wall ever come down, there's a pretty significant imbalance that will need to be cleared there. Also, a big detriment for anyone, making long-term financial investments in China. So China can internationalize the yuan as a settlement currency because it has to. It will never be a global reserve currency. And this does create problems for China on the backside of a potential decoupling. Because in a decoupled scenario, China will run trade surpluses with the bulk of its trading partners, and ultimately will have to accept RMB IOUs from the countries running deficits with China. And for commodity providers like, maybe Saudi Arabia and others who run surpluses with China, they're not going to want to accumulate assets in the RMB. This is where gold and hoarding of other critical materials might come in, because China can satisfy those surplus countries for some period of time by delivering them gold or critical materials that they've hoarded and are selling at a premium rate. Lastly, this post-decoupling world does lend itself to a possible mechanism that China could establish to get through at least a couple of years of trading in a decoupled situation. And it relates to the fact that they've started asking potential trade partners to deposit gold in Shanghai. You could envision a trade netting settlement mechanism where, let's say, China buys oil from Saudi Arabia and they sell cars to Nigeria. They could simply move some gold from Nigeria's account to Saudi Arabia's account to settle the netting of that in Shanghai. But eventually the countries that run deficits would run out of gold. The bottom line is, in a decoupled situation, China can probably get through a few years with various mechanisms. But ultimately, the fact that it wants to run persistent trade surpluses will really cause it problems in that environment. This is why China would love to have a reserve currency, but until they're ready to open up their markets and create a situation where investors feel they have the requisite legal protections, it's just not going to happen. This is a problem for China. They'd like to solve it. They're not going to be able to.